focuses on climate-related reporting, we have taken the TCFD recommendations framework as the basis for our work, and we'll further explain some of the scope and the further alignment with that TCFD framework in this webinar. I think it's good to say, first of all, that within the corporate reporting dialogue, we have seen significant achievements by completing this project, and that not only regards the report itself, but also the further collaboration between the organizations, between the technical teams, and it has also further strengthened understanding in terms of content of each other's frameworks and standards. So from the perspective of the dialogue, we are very pleased with this project and also happy with the results, noting, of course, that this project was focused on mapping and not on direct alignment, and we'll say a few more words on that during this webinar. So it has been realized by the dialogue partners that greater alignment is needed, and also recognizing that will not be easy. It has to do with some of the governance and structure of the organizations. It also has to do with the wider landscape that these global partners are part of. And whereas the 5 organizations that will present today have their part to play, it is also fair to say that many other initiatives around the world, some focused on topics, some focused on geographies, some focused on specific parts of the economy, would also have their role to play if we want to resolve some of the confusion that stakeholders being asked on that as part of this project have responded with. This webinar will take you through our results. We'll tell you some high-level conclusions, and we'll also respond to any questions that you might have. And in that sense, if you have any questions, please use the chat box to ask your questions or make your comment or remark. And before I start, I see already one comment coming in, which your question, which is, will the presentation be shared afterwards? And yes, we will. There will also be a recording, so anyone who wants to listen back or wants someone else to point out to it, that will be published on corporatereportingdialogue.com. The publication that we have released a couple of weeks ago, Driving Alignment in Climate-Related Reporting, the year 1 on the Better Alignment Project. As said, we focused on climate-related reporting and have taken the TCFD framework as the basis for our work, and there were a number of reasons for it. One is that climate change and climate risk is very high on many organizations and institutions' agenda. Secondly, that enabled the participants in this project to limit the scope to a framework that is overseeable and doable in terms of mapping. So this report has a number of elements and chapters, and I think it will be good to take you quickly through the various sectors that also reflect the work done within the project. As part of our project, the essential task was to look for the levels of alignment with the TCFD recommendations, and that regard the example metrics that are part of the TCFD guidance in their framework, but it also relates to the disclosures, the 11 recommended disclosures, as well as the principles. Because if the organizations would have conflicts at the level of principles, we might not even see it as valuable to step into the other elements, or we would know at least what's a significant issue to resolve. But in addition to this more technical part, we also talked to stakeholders. We released a survey and we held roundtables around the world and spoke to about 250 participants at these roundtables to get their feedback and input on where reporting on climate, but also on wider ESG should go. As part of that stakeholder feedback, we noticed that there was a significant ask for answering the question, how do the frameworks and standards fit together at the level of the overall frameworks and standards, so not so much on the detail. So therefore, the report also includes a section that explains for specific situations, such as you want to issue or prepare an integrated report, and how could you use the different frameworks then in conjunction with each other, as an example question, how you could apply the various frameworks, and that is in this section 3. We then end the report with potential areas for future work. These are currently being discussed, whether that is feasible, valuable, and if so, what steps to take first. Before we move into some of the detail, I think I'd like to give you an overview of the overall conclusions for each of these elements. And that starts with the 7 principles for effective disclosure that the TCFD have developed, and we match these against the participants' frameworks. The conclusion being that these principles of the participants and the TCFD are harmonious and complementary, and there are no sources of conflict. That means that if you are a report preparer or you are a report user, you can be assured that everything is built on the same basis, and the reported information would not conflict at the level of principles. Then secondly, look into the TCFD's 11 recommended disclosures. We have assessed and aligned or mapped, I should say, sorry, mapped each of the frameworks content to each of the TCFD's recommended disclosures. And comprehensively, it appears that the frameworks cover all the recommendations of the TCFD. The word comprehensively here means that there is not a situation where one framework covers all the disclosures, but for the 5 participants as a whole, all the recommendations are covered. That is what is being meant to say here. Then we also looked into the metrics in very much detail, I would say, to see for the 50 illustrative example metrics that the TCFD have included in their further guidance to the recommendations itself, to see for these metrics to what extent these metrics are covered by CDP, GRI, and SASB, as these are the framework standards that have specific requirements for indicators, and also importantly to assess to what extent there is alignment between these 3 for any of the specific metrics as included in the TCFD. And looking at this overall picture, 80% of the 50 appear to be fully or reasonably covered by CDP, GRI, and or SASB. Again, it's not the case that every metric is covered by every framework, but for 80%, there is at least one of the frameworks that cover that metrics, and they are either fully or reasonably covered by that specific framework. Then also between the 3 framework standards, we assess the levels of alignment between them. Detailed work by the technical teams concluding that for 70% of the 50 metrics, there is no substantive difference between the participants' indicators. We deliberately took that word substantive differences, as of course, if you look into each of the 3 frameworks, those of you who work with these will notice that there are differences in terms of language, in terms of detail of definition, in terms of structure, and more. However, if we look at it substantively, then that is the key question to be answered here in this mapping project. And for that, we have used the word no substantive differences, and Stan will further elaborate on that later in this webinar. For the remaining 15 indicators, and I think also there, Stan will say a little more on that, the substantive differences are limited. So let me then, with that, move to some of the key consultation findings. And in the report, you'll find the CRD's responses to some of the key messages that we received. And to not go through all of them in light of the time, but to pick a few, there is a need for further clarity about the interconnections between the frameworks and how they fit together. And as you may have already heard me say, we have included a section on how the frameworks and standards work together in specific reporting situations and how they are complementary to each other. Also, there is a need to better understand the connections between ESG information and financial information. And today, Nadine will say a little more on that, on how this works in mainstream reports, and Lisa will talk about integration. In the report, we have dedicated a section to that. And then there was also the pressing need by some, or by a number, I think I should better say, to come to a single reporting framework and to explore the feasibility of such framework. This has not been said by the majority, but we have heard it in a number of cases and been raised in a number of stakeholder conversations we have had. And we have very seriously discussed this idea and looked into potential ways to achieve that. We should know that the frameworks all have their specific audiences, their specific objectives, and also their individual governance systems and processes. And that in itself prevents some of the potential pathway to such a solution of a single framework. But furthermore, it was concluded in the CRD that given the composition and the remit of the corporate reporting dialogue, that might not be the feasible way to get to a single framework, if that would be the solution, by the way, at all. This and further responses you can find in the report in one of the annexes, and it lays out how we have looked into the major consultation findings and how we have seen our responses and also solutions, I would say, going forward. With that, I think we are on time to move to our first speaker from GRI, Sarah Jane Dominique, who will lead you into the further results for the principles.
Hello, thank you, Wim. So I work in the standards division at GRI, and I was the technical lead for GRI in the Better Alignment project over the course of the last year, which was a great opportunity to truly understand that on the face of it, we have a lot of commonality between our frameworks. Today I'm going to particularly take you through the mapping of the principles across the frameworks and the outcomes of that exercise. The TCFD, many of you will probably know, has 7 principles for effective disclosure. So all of the disclosures that the TCFD recommends should exhibit the 7 characteristics, well, probably more than 7 characteristics that are on this slide. And if we move on to the next slide, the task of the project participants was to map the principles in each of their reporting frameworks to those 7 TCFD principles. And Wim has already given you the headline conclusion, which is that the TCFD principles are harmonious and complementary with those of the participants' frameworks. And the mapping didn't show any sources of conflict. I'll go now on to more detail in terms of the actual findings. Given the TCFD explicitly and intentionally drafted their disclosures so that they would be consistent with other global, internationally accepted frameworks, it wasn't a great surprise that we reached the conclusion that we did. And certainly all frameworks request organizations to disclose complete, balanced, comparable, and verifiable information on an annual basis, and that is consistent across the frameworks. There are some differences in alignment, but those differences largely reflect the distinct outlook of each framework. And those can be due to the intended audience, the reporting channel, the scope of the subject matter, the types of disclosures that the framework is focused on, and also definitions of materiality. There were some differences in principles in terms of them being covered in some frameworks and not explicitly covered in the TCFD. And a couple of examples that I can give are stakeholder relationships in the international reporting framework. That is not explicitly in the TCFD disclosure principles, and nor is sustainability context. That is something that is included in the GRI standards. Something else that we identified was that in some of the frameworks, some of the principles weren't explicit, and a good example of that is in the CDP questionnaires. There is no explicit principle for comparability, but comparability is inherent in the design of the CDP questionnaires, such that all organizations are posed exactly the same questions, and therefore it's expected that comparability arises as a result. Finally, there were some slight differences in language and terminology, and I think that possibly adds to the perception that the frameworks are more different than they are, and that is understandable. And then that brings us to the final slide, where we talk about, well, what does this mean? So for those that are preparing reports, or even those that are assisting report preparers, such as consultants, it has been demonstrated that the lack of conflict and the considerable agreement between the TCFD and the other frameworks principles provides clarity to report preparers. And Wim already mentioned earlier that the fundamental basis across the frameworks can be seen to be the same, or at least largely consistent. And the alignment demonstrates that there is commonalities between the purposes of the frameworks in terms of the resulting disclosures and the characteristics that they would exhibit. And then finally, what does this mean for those who are using the information that is reported? It can be shown that you would have confidence in the complementarity of the different frameworks. So if a report preparer chooses 2 or more of the frameworks, including the TCFD recommendations, then you can be confident that in terms of the principles, they are fundamentally consistent and not in conflict. I'll hand back to Wim at this point.
Thank you very much, Sarah Jane. Thank you very much. And that leads us into the recommended disclosures, the 11 disclosure recommendations that the TCFD have developed. As said, we have mapped all of the frameworks and their content against these, and Nicole Dandu of CDP will present the results of that exercise and guide you through some of the details. Nicole, please, up to you.
Hello. Hi, thank you, Wim. Like Sarah Jane, I was the technical lead for CDP in this project. I work in the reporting team at CDP where we develop our questionnaires. I thought it'd be useful to start with just pointing out where in the report you can find more information about this disclosures mapping. So the analytical approach there is in the beginning of section 4, and the results are also further down in section 4. And then also to point out that there are some tables at the end of the report in Annex 2 which map out the disclosures. There are, of course, next slide please. There are, of course, 11 TCFD recommended disclosures, and the TCFD provides general guidance and sector-specific guidance for those 11 disclosures. So what was our task? What did we do? Each partner worked through the 11 disclosures to identify emissions and differences, and then we assigned a level of alignment. So what do we mean by that? So first of all, we looked for any aspects of the TCFD disclosures that weren't covered by our frameworks. And then we looked for differences, so any content differences in the disclosures and the information that our frameworks were requesting. And then finally, we assigned, based on those two exercises, we assigned a level of alignment between our frameworks and each of the disclosures. So they were based on full, reasonable, or moderate, or very limited, or none at all. And then Wim, as project lead, verified our classifications and looked for accuracy and consistency in the work that each partner had done. Next slide, please. So here's an example of what you can see in the report. So on the left-hand side, this is an example based on governance A, and then this is against CDP, our 2019 questionnaire, and you can see there we've got a description of which questions in the CDP framework in the questionnaires map against that particular disclosure. And on the left there, on the right, sorry, you can see that we had no emissions, no content differences, so we have full alignment there. So you can find all the outcomes for all 11 disclosures in Annex 2. So here in red is the main finding, that the 11 disclosures are comprehensively covered by our frameworks, and that was the main conclusion. So each recommended disclosure is fully aligned with at least one of the frameworks. And the frameworks are particularly well aligned in governance and risk management disclosures. And these are actually the disclosures that organisations are reporting least against at the moment. And while some of the frameworks didn't cover all of the recommended disclosures, there were no instances of conflict in their content at all. The least amount of coverage was actually found in the strategic resilience and in use of scenario analysis. And as this is an emerging area, so the frameworks and standards are still evolving on this topic. Next slide, please. So here we can see the headline for each of the organisations. So for the CDP questionnaires, there was nearly full alignment with the 11 disclosures. So what that means is that organisations providing a complete response to CDP's climate change questionnaire are likely to fully meet the content requirements of the TCFD. So CDSP's framework, there was nearly full alignment too, while it takes a less prescriptive approach to the disclosures. GRI standard report preparers who adopt the GRI standards will meet many of the disclosures, but as GRI is much wider in scope than the TCFD, it doesn't fully cover every detail of the TCFD disclosures. IIC had good alignment and can be applied to meet many of the disclosures across governance and strategy and risk management. And SASB, it was well aligned with recommendations for metrics and targets and complementary, we would say, with the other elements. So that's a few of the headline findings. So the next slide then is how is this of benefit to companies? We would say, well, companies can be reassured that using the frameworks will lead to robust climate-related disclosures. Report preparers now have a practical overview of how this works and how collectively the frameworks cover the TCFD disclosures. And then they can also see where there are any gaps in any one framework that can be filled perhaps by a complementary framework. And how has this benefited us as frameworks? Well, each participant now understands how it might need to have greater alignment or wish to have greater alignment with the TCFD. We can see the gaps. It is furthered our work on providing greater clarity in the reporting landscape, and it will help us to reduce barriers to effective climate reporting through our frameworks. And finally, as many of the participants will say, it's definitely strengthened collaboration and awareness amongst us. So that will definitely lead to more alignment in the future going forward as we work technically together. Much more cooperation between us all has been facilitated. That's everything I have to say on the disclosure mapping.
Thank you, Nicole. And we take you in this webinar step by step into more and more detail. After the disclosures mapping, we will focus now on the metrics, where we not only map the frameworks against the example metrics in the TCFD, but also against each other, and Stan White of SASB will introduce us into that. Please, Stan, up to you.
Thank you, Wim. So in this section, I'll be covering the metrics mapping methodology of the report, how to interpret the results of the mapping in this report, and some of the key takeaways from the metrics mapping exercise. For the indicators mapping, CDP, GRI, and SASB each mapped aspects of their disclosure frameworks to the TCFD's illustrative example metrics. Indicators being referred to as questions in CDP's disclosure framework, disclosures in GRI standards, and accounting metrics in SASB standards. Each of the three participants first assessed the alignment of their own framework or standards with the TCFD metrics. They then assessed the information collected by reporting organizations for their framework or standards, and which meets the TCFD metrics compared with the information collected for the other frameworks or standards for the same TCFD metric. The technical team's starting question was, relating to the TCFD metric, to what extent can data collected for framework X be used for reporting against framework Y? There were three possible outcomes of this assessment. The first outcome being the frameworks are aligned. In this case, for reporting against TCFD metric, a company is able to use the information it already collects for framework X, and that information is also valid for reporting against framework Y. The second possible outcome, the frameworks are not fully aligned. In this possible outcome, for the specified TCFD metric, there may be minor differences in the data collected for framework X that can be used compared to the data that is collected for framework Y. These may be instances where the data collected for framework X may be closer aligned with the TCFD metric, but that the data can be used to report against framework Y. In such cases, additional explanatory text was included how framework X goes further than framework Y with respect to the reference TCFD metric. The third and final outcome is there's substantive difference between the frameworks. In this outcome, for the specified TCFD metric, the data collected for framework X is so different from the data collected for framework Y that it could not be used to report against framework Y. With respect to the TCFD illustrative metric, a company could use either framework to disclose in line with the TCFD metric, but it would not be able to repurpose that data collected for framework X in framework Y. So on the next slide, the mapping methodology included two types of assessments. First, each framework, CDP, GRI, and SASB, mapped content from their individual frameworks to each TCFD illustrative metric, and then assessed and indicated the level of alignment all the way from none, illustrated as dark gray, or to full alignment, which is illustrated as dark blue in the legend. Then each framework assessed this mapped content against the other two frameworks and assessed the level of alignment between the participant frameworks. Identified any differences, either no substantive difference, illustrated as light gray, or substantive difference, illustrated as pink. On the next slide, we'll dive into a specific example with one TCFD metric. So on this slide, we see an example of the results of the mapping exercise. On the black bar at the top, you'll observe the TCFD metric. In this case, the percentage of water withdrawn in regions of high or extremely high baseline water stress, as well as the TCFD industry group on the right, in this case, the energy group. Across the vertical and horizontal axes, you can observe each participant framework, CDP, GRI, and SASB. Along the diagonal, you can observe the content that each framework mapped to TCFD's metric. The color of the box indicates the level of alignment. Here, we see each framework has mapped content that is fully aligned to the TCFD metric, as indicated by the dark blue color. In the off-diagonal boxes, you can observe the level of alignment between frameworks, as well as the description of the differences between the frameworks. This analysis was performed for each of the 50 TCFD metrics, as included in Appendix 3 of the report. So on the next slide, here we have zoomed out, and you can see each of the 50 TCFD metrics and the level of alignment. The results of the mapping against the TCFD's 50 metrics by CDP and SASB showed broad alignment around indicators for reporting on climate-related risks and opportunities, with only 15 of the 50 illustrative example metrics having substantive differences. The instances of substantive difference between the three participant frameworks and standards are mainly due to the different approaches to sector specificity, as well as a few specific and different approaches to indicators or methodologies, such as GHG emissions or water. That said, where there are instances of difference, a report preparer can use the frameworks and standards in a complementary fashion with knowledge of the ways in which they align to achieve the organization's reporting objectives. In addition to the value of the technical mapping exercises to reporting organizations, the results provide a valuable platform upon which the three participants can analyze the differences between their frameworks and standards and move towards jointly refining and continuously improving overlapping indicators to achieve better alignment, while of course taking into account our respective governances and audiences. So what are the key takeaways for reporters and report users? For report preparers, the results provide a tool for navigating the well-aligned indicators CDP, GRI, and SASB offer for climate-related risks and opportunities. The detailed mapping shows how the different frameworks and standards can be used together to efficiently and effectively measure and report the most relevant and material metrics and targets in line with TCFD. For report users, the report underscores the fact that the frameworks and standards can be used together to produce useful disclosures. Thank you, and with that, I'll hand it back to Wim.
Thank you very much, Stan. Very good introduction in how the detailed technical work has resulted in this overview and further mapping between the frameworks. You saw the overview of the 50 illustrative metrics on the last slide that Stan presented, which is back on screen now. We will also very shortly present the online report, and as part of that, there will be a possibility to click essentially on each of these 50 and go into further detail into the mapping between the frameworks for any individual TCFD example metrics, as Stan has just explained. And I should say, I think, two further things about it. One is we will notify you once the report gets online so that you can access it the way I just described, and you would also be able to, for example, download the FAQ section separately. But furthermore, I think it's important to realize that whereas we have provided a practical overview here of how the frameworks fit together and work together at the level of metrics and also for the disclosures, we strongly advise you, encourage you to not use it in isolation, but always go back to the underlying frameworks and standards to learn about the real detail and content, and make sure that you also understand the context of each of the individual frameworks and standards when you use them. The TCFD has advised, recommended to disclose the information on climate-related risks in the annual reporting of companies, sometimes called directors' report, sometimes called MD&A, sometimes called even differently. For us, that meant that we also have looked into what do we as CRD project participants say about including this information in mainstream reports and what are perspectives on it. So I'm very pleased to hand over to Nadine Robinson of CDSB to further explain on that part of our report.
Thank you, Wim. We at CDSB, just to say that I worked on the project in the technical team alongside with my colleague David Astley, and just to echo the comments that were made earlier by Sarah Jane and others about how we really enjoyed that. Now, so far through the webinar, we've explored how the publication captures the alignment of the participants' frameworks and standards to the TCFD principles and 11 recommended disclosures. And we've demonstrated in the publication that our existing frameworks and standards can help report preparers generate the necessary content needed to make decision-useful TCFD disclosures, both qualitative and quantitative. So then that leads us to the next question of where these disclosures should be made. Section 4 of the publication includes a subsection on including TCFD disclosures in the mainstream report. Now, we've included this in the publication as the TCFD calls on report preparers to disclose climate-related financial information in mainstream annual financial filings. And this is a means of connecting financial and non-financial information related to climate risks and opportunities. I would also like to point out to you that we have a section on linking broader ESG and financial information, which you may also wish to read. So the TCFD final report notes that in most G20 countries, companies with public debt and equity are required to report material information in their annual report. So if climate is material, then it should be disclosed there. The TCFD does note that this should not supersede national legislation where there could exist conflicts. So as climate change is a systemic risk, most geographies and industries are likely to be affected by its impacts, whether physical or transition. For this reason, it is seen as a non-diversifiable risk. The TCFD therefore advocates for all organizations to report how their governance and risk management systems account for climate change. This also allows mainstream report users to see how alive the organization is to the possible implications of climate-related risks and opportunities and their associated governance and management. For organizations who identify climate risks as material, then the TCFD also requires them to report on how strategies are being adapted and adopted to account for climate risks and opportunities. Likewise, the TCFD expects companies will report on metrics and targets they're using to assess progress. So again, we have both qualitative and quantitative information to be included in TCFD disclosures in the mainstream report. So if we turn to the next slide, I'd like to put that last slide in context of the current state of practice. As organizations are following the TCFD's call to report climate-related, our organizations following the TCFD's call to report this information in the mainstream report. So the second status report by the TCFD tells us that as of yet, corporate reporting of material climate information and its inclusion in the mainstream report is falling somewhat short. 60% of companies surveyed identify climate change as material now, or estimate it will be so in the next 2 years. So by extension, we would then expect to see these companies over the course of the next 3 years making disclosures in their mainstream report. However, currently only 30% of companies analyzed report their governance and risk management processes around climate change, and this was to be required to be disclosed by all in the mainstream report. So we're seeing an upward trend as well in terms of an increased number of recommended disclosures being made. On average, 3.1 of the 11 recommended disclosures were made in 2017 and 3.6 were made in 2018. So this is a step in the right direction, but we need to do more to facilitate a step change in implementation to achieve the TCFD's outcomes. It was also identified that slightly more companies are reporting in their sustainability reports than in their annual or integrated reports. These results suggest that more could be done to support preparers to make complete disclosures in the mainstream report. And we have commented on this point specifically in our Better Alignment report, where we provide further details of how reporting frameworks of both CDSB and IIRC can also help preparers to meet the TCFD's position to make the disclosures in the annual report. So on the next slide, disclosing with the CDSB framework, I'd just like to state that we strongly believe that the Better Alignment Project's research and findings can be a great help to those organizations producing the content to make their TCFD disclosures. We additionally believe that both the CDSB framework and IIRC's integrated reporting framework are useful resources to help companies report this information in their mainstream filings. And again, I've said we've touched on both of these in the report. So if we take the CDSB framework as a quick example, which is outlined more in the report, the CDSB framework is fully aligned to the 7 disclosure principles and nearly fully aligned with the recommended disclosures. Both TCFD and CDSB share a common reporting outlook. That is, reporting material, environmental, and climate information in the mainstream report to affect capital allocations. When reporting material, climate, and other environmental information in the mainstream report, CDSB maintains that the report should be adapted and not expanded, so this information should be interspersed. If the information is material, it should be treated as such and reported like all other material content of the report and with the same level of rigor as financial information. We offer guidance in our framework for how to achieve this further in terms of ensuring connectivity of disclosures. In the mainstream report in CDSB, we're aiming for a holistic narrative that allows users to understand how they're identifying, assessing, and managing climate-related risks and opportunities. Further guidance is also given on reporting on the TCFD in the mainstream report through the IIRC's integrated reporting framework, again to help make the crucial connection between climate and financial information. Thank you.
Thank you, Nadine. Just reminding everyone, if you have any question or comment, then please do so via the chat box. We will now get into the final introduction today by Lisa French of the IRC, talking about the intended project outcomes and how the report relates to that, as well as explaining a little more on further integration of climate-related information in reporting, I think even somewhat beyond that. So Lisa, please, over to you.
Yes, thank you, Wim. So I'm very happy to be part of today's webinar on behalf of the IRC. We've long championed the integration of financial and non-financial information into capital market decisions, and we've also long acknowledged the growing influence and importance of climate change on value creation over time. So, with this preamble in mind, I've summarized here key outcomes that the Better Alignment Project seeks to achieve, and you'll find this on page 2 of the report, which was launched last month. So the outcomes listed here on the left side of the screen push for improved coherence, consistency, and comparability among our standards and frameworks, as well as a need to highlight our common ground and to flag where gaps remain. The project also aims to embed climate-related information into mainstream reports, as Nadine has just addressed, in a way that connects to strategy, governance, risk management, and metrics and targets. So we've had quite a lot to say about reporting today, but I think that we would all agree that this is not about reporting for reporting's sake. So ultimately, we're looking to support behavioral change by businesses and investors alike. So The right side of this slide, which we have highlighted in a blue-green color, examines the so what of climate-related reporting. So first of all, we're looking to help financial markets better capture or price in ESG-related externalities. So investments should flow in a way that properly reflects the risks and opportunities arising from climate change. The next point focuses on comparability. So analysts and investors should feel confident that companies have measured and calculated and presented climate-related information in a consistent way. This allows comparisons across companies in terms of their impact on a sustainable environment and therefore their impact on a sustainable economy. So that's the investor side of the equation. Now let's take a look at things from the report preparer's side. So on the slide, if we move from left to right, embedding climate-related data into business operations and into strategy is key to tackling the climate crisis from within. And at the risk of exhausting an already exhausted quote, what gets measured gets managed. So this information soon guides decisions at all points of the business model, from procurement to product and process design to product and service delivery. So in this way, emissions intensity and adaptation really do start to permeate all facets of business thinking. And as this thinking evolves, so too does internal reporting. And we capture this in the second circle. Again, there's a reason behind this reporting, and that's to keep these issues at the fore, to reduce emissions, and to pursue adaptation strategies. So this internal reporting then becomes a natural stepping stone to enhanced external reporting, also captured in this circle. Next, the integration of climate-related matters into mainstream reports leads to better informed decisions by investors. And by this, I mean more appropriate asset allocations based on a clearer understanding of climate-related risks and opportunities. So this third circle captures that and is actually a nice bookend to my comments. So if I just were to recap, we started with investor demand for consistent and comparable climate-related data. We saw how climate-related data should flow through operations and internal and external reporting. And then we finally recognized that mainstream reporting on these matters offers the most effective conduit to better informed investor decisions. So on that note, I'll wrap up now and hand over to Wim.
Thank you, Lisa. And with that, we are at the end of our introductions today of the results of the report. So again, if there are any questions, then please use the chat function. And some come in, and I have to read out some, but I would like to start with a comment that if you want, Nicole and Stan, you may respond in addition to my first 2 cents. So the question is this: SASB considers climate change material for certain sectors and not for others, while in CDP, leadership is predicated on performance, whether climate-related disclosures is material or not. So there is a difference in treatment of materiality. And what is the Better Alignment Project's perspective on this difference? My 2 cents on this are that this is an illustration, I think, of some of the points that we also touched on during the project, which are the various frameworks and organizations have their own specific objectives, their own specific audiences, and or their own specific focus. So SASB focuses on financial materiality of ESG information for investors. CDP also works for investors, but in addition aims to provide insights into the status of climate-related performance, if you like, of corporations. And I hope, Nicole and Stan, that I reflect this correctly. With that, we have 2 different perspectives, and with this project, we aim to say or to assess, if you take the TCFD, which focuses on climate-related financial risk as a basis, how could you use each of these for that specific purpose without necessarily wanting to resolve that issue within the project, as that was not the objective or the remit, if you like. And with that, I stop with my explanation, 2 cents, and maybe Nicole or Stan, you want to add any perspectives from your end?
Hi, it's Nicole. No, I'd just like to reiterate that it's a very good example of where the different purposes, if you like, of the different organisations come to play. And CDP is a disclosure organisation, and like TCFD, you know, we committed to match the TCFD, and our scoring methodologies would reflect that. But yes, and CDP collects information for investors and is driven by the data needs of investors, but also we have our own strategic mission, which is to look at environmental impact. So those 2 things are reflected in our scoring methodology, and that is a little bit different to SASB.
This is Stan, and I think SASB's framework and standards provide a good tool for companies to identify the potential climate related risks in their industry, given our sector specific approach. And we provide a good tool for metrics for companies to measure that performance on those risks. And I think we were encouraged by the alignment between the TCFD's metrics and SASB's performance metrics.
Thanks, Stan. There are, and Nicole, there are 2 questions that relate, I think, to a similar topic, which is, are we now going to see simplification in reporting leading towards less frameworks or even a single reporting framework? As part of our project, we came across that. It wasn't the objective of the project. It was the longer-term objective. It is a longer-term objective. But within the project, we came across this topic of why don't we have one single framework, and why don't we get to that? I think honestly, getting back to the previous question, it is also an illustration of where the frameworks differ in their objectives and audiences, and that in itself would create, let's say, difficulties in merging all of the content. I'm not talking about merging the organizations, but merging the content. Because you would need to start for that with one audience, one objective for that single framework. Having said that, there is a commitment by the frameworks to look into further alignment, taking into account their own governance processes and structures. There is a clear understanding, I think, of a increasing ask specifically by investors for this one single framework that would resolve their specific request. It has also been concluded that that is not within the remit of the corporate reporting dialogue. The frameworks get together to discuss how they can better align and become comparable based on the current structures. And therefore, that solution seems not to be within the corporate reporting dialogue, but it has been acknowledged based on all the stakeholder feedback that this is a question, and that where the frameworks can help to that, if that is going to happen, then they are open to further explore that. There's also a question about, I think, Nicole, I come back to you. You looked at reporting in a mainstream report and a sustainability report, but would you consider publicly disclosed CDP responses also as reporting? And wouldn't the CDP responses largely meet the request of the TCFD? I think I should give you here the floor for another 1 or 2 minutes to explain on that.
Yes, the CDP questionnaires, as I said before, do align very well with the TCFD, and it's back to my point about for CDP, CDP is a disclosure framework. We are a disclosure platform. So whatever frameworks an organization is using, they can use that information to disclose through CDP. And this project has been very helpful in showing how CDP actually, that there is no conflict between CDP and the other frameworks, that they are very well aligned. What that means is if you are collecting data for the other frameworks, you can report it through CDP. I think that really is, from CDP's point of view, what differentiates us from the other frameworks. We are a disclosure platform, first and foremost. And it's very important, therefore, that when we're developing our questionnaires, that we align closely with whatever other reporting frameworks companies are using, organizations are using, and we do that. We strive to do that.
Thank you very much, Nicole. Thank you. Then we have one final question that I'm going to address also in light of the time. The question is, how do you see these frameworks being utilized or being useful for financial sector policymakers, regulators, and supervisors? And are there any that are specifically useful for this audience? My response to that would be that with this project, we have looked at a specific type of reporting, which is climate risk reporting. We have looked at financial materiality as part of that. And we have seen that the frameworks collectively cover the needs recommendations as they have been expressed by the TCFD in their report. Is there any one that is specifically useful for regulators, policymakers? I think for these organizations or players in society, it is important to also take the best of all. I would say they're taking into account the specific audience or objective that you as a policymaker, regulator, or supervisor would have. If we take some of the central banks, they focus on financial risk. Climate risk is very prominent on their agenda. They can use effectively, I think, the report that we have just released to see that from each of the frameworks, they could use specific elements if they wish to develop their own, or they could explain how the frameworks could work together for their specific purpose. So I would not see one to be favored over the other in this regard. They all have their specific objectives and audience as explained earlier. With that, I hope you have seen this as a valuable webinar to understand the report. I also hope that you see it, the report, as a document to be used in practice, as a document that you can use to assess your matching of your reporting based on one or more of the frameworks against the TCFD, how you could use the frameworks in conjunction with each other, and how they fit together. I hope you have also heard from us that whereas these 5 global frameworks are part of the problem and also part of the solution, the reporting landscape is much wider, and the hundreds of other initiatives that are out there also contribute to this confusion about the reporting landscape. The CRD participants have taken this step as a first step to look into where are we, where can we be used together, and what are potential ways forward. We have benefited a lot from the work, the collaboration between the technical teams, as said by a few, I think, in this call already. And we hope that this report will be a basis for practical use again by you, taking into account the details of the individual frameworks, and that you use it as a reference guide and an overview of where the frameworks and standards are. With that, I would like to thank all the speakers of today, as well as everyone listening in. Hope again that you found it valuable. Will you receive an email shortly about the report once it gets online? And for the rest, I wish you a pleasant continuation of your day or evening. Thank you very much.